YouTube channel. Today's video is going to be a trade breakdown and an entry checklist of mine. So let's get started. Whenever I'm getting started at the beginning of the week, I always look at the higher time frame. Whenever I'm framing what the monthly is doing, I like to look at the higher time frame. Even if I'm trading on the lower time frame, I still like to look on the higher time frame because the higher time frame actually gives you a clear directional bias. So as you can see on the monthly, we have a large displacement to the downside. We can clearly see on the monthly that the monthly is bearish. So it means the euro is weak and the dollar is strong. So DSY is going up bullish for a while now. Okay, so when I'm done on the monthly time frame, then I go to the weekly time frame to see if the weekly actually aligns with the monthly. And as you can see, the weekly is quite bearish. The weekly is also bearish. We came out of this imbalance, okay, which is a fair value gap. Okay, a fair value gap. We came out of this imbalance. We displaced to the downside. Now we form a new inefficiency here, which is right here, a small imbalance. We have a small imbalance here. Okay, so when I saw this small imbalance, immediately my mind told me draw on liquidity might be potentially this low, which is quite obvious, right? This low. So I was targeting this low. I was trying to see if I could get a 2-hour or a 3-hour because I'm a swing trader. Okay, then my entry from the weekly is always the 4-hour. Then I went into the 4-hour. Okay, so I went into the 4-hour. If you see here, we had a market structure shift here. We had a market structure shift. Price rallied up, broke market structure, gave us an order block, which is the last up close candle before a down move. Okay, price literally retrace into this order block. See, we had a retracement into this order block. My entry was a little bit down because I calculated spread. Okay, my stop loss was above this swing high here because I believe price shouldn't violate that order block, and my exit was this resting low here, which was the low on the weekly, which was this low, and that was my take profit. And I'll show you another trade, XAU USD. Okay, this was I believe last week or so. Yeah, it was last week. So let me delete everything, then move. Okay, we'll start again on the monthly time frame. As you can see, we had a monthly imbalance here. We had a monthly imbalance here. Okay, price tried to reject off this monthly imbalance but failed. Okay, so if price is actually failing to reject off a fair value gap, I believe price is actually seeking liquidity. And where is price seeking liquidity? This resting low here and here. You understand? So my target was this resting low. Okay, then I went to the weekly to see what the weekly is actually saying. We had a weekly consolidation here. See, price swept this low here. We had a weekly consolidation, quite choppy. I went to the daily for more context. I saw price was retracing into this imbalance here. Okay, so my entry checklist, my entry checklist from the daily is always the 1 hour. I went to the 1 hour. I saw price shifted in market structure here. It broke this swing low, this significant swing low. Okay, broke this swing low. Gave us an inefficiency here. Okay, gave us an inefficiency here. Yes, this gave us another inefficiency here again. But I didn't take from the first fair value gap because price gave us two fair value gap. So I personally don't believe price is going to retrace back into the first one. So what I did was I took my sell from this here, from this other block here. I believe I closed my profit here. I closed my trade here, and my stop loss was above this high. So I was targeting a 1 to 2.5 here, 1 to 2.5 here, which was around here. Yes, and this was exactly it. So if you check on GBP, USD, GBP USD, we had something similar on the weekly time frame. We had this inefficiency here. As you can see, price has been bearish, like bearish for a while now. Okay, we had this inefficiency here, which is a fair value gap. Now I went to the 4 hour. If you go to the 4 hour, we have this big bullish order block. Okay, this is also a very good swing entry position. Okay, targeting this low, stop loss above this high. Okay, targeting on the daily, check on the daily. On the daily, we have this low here, targeting this low. See, even on the daily, we had an IRL to ERL also. We had this daily. Let me delete this. Okay, we had this daily internal range liquidity. Let me delete this. Okay, we had this daily internal range liquidity. So let me delete this so you can see properly. Okay, we had this daily internal range liquidity, which is a fair value gap, daily internal range liquidity, and we have external range liquidity. Wait, let me show you external range liquidity here, which is this resting low, right? Okay. Sorry, just give me a minute. Why is my trading view acting up? Okay. Yes. Okay, fuck it. Yes, external range liquidity. Yes. See, we have this shift in market structure. We have this market structure shift here. Okay. Price gave us a resting order block here. Order block. Okay. I'll take myself from this order block. Stop loss above this high. Targeting this resting low here. As you can see, price almost stopped us out. Because of my stop loss was above this low, I didn't get stopped out. And this was a almost 1 to 4 risk to reward. I didn't take this trade, but I was just showing you how IRL to ERL work. So let me show you guys how this strategy can actually work on a lower time frame. See, we have this 4 hour inefficiency here, right? We have this 4 hour inefficiency. Price actually retraced into this inefficiency, which is the fair value gap. Then I'll go on the 15 minutes time frame. On the 15 minutes time frame, we have this big fair value gap. You understand? So personally, I will use optimum trade entry, which is my Fibonacci settings here. I'll draw it from the swing high to the swing low. Okay. I will take my trade from the 0.62 level. 0.62 level. My stop loss will be above here. Just a little bit above this order block, in case if price wanted to retrace into the order block. Then I'll target this resting low. This is a 1 to 3.4 risk to reward, which is quite good because I'm a low risk to reward trader and my win rate is pretty high. So if you guys want to copy my Fibonacci settings, my OTE settings, my Fibonacci settings, this is actually my Fibonacci settings. So this is actually my simplistic approach to the market. My setup is quite simple. Actually, I didn't come up with these concepts. These concepts are actually ICT concepts, or you can say SMC concepts. But anyways, thank you guys. Thank you guys for watching. Have a blessed day. See you.